Good afternoon, everyone. I'm delighted to welcome you all to our webinar on the EIB Group response to COVID-19 and what is available for social entrepreneurs. I'm Luísa Ferreira, Head of the Social Program at the European Investment Bank Institute, and I will be your host for today's webinar. This webinar is, in fact, part of a series of webinars we have been organizing, principally for the Social Innovation Tournament alumni, but are open to all change makers interested in this topic. Before I introduce you to our speakers, I would just like to start with a short introduction to the EIB Group. And the EIB Group is comprised of the European Investment Bank, the European Investment Fund, and the EIB Institute, the EIB Institute being the philanthropic arm of the group. The EIB is also known as the EU Policy Bank and was created in 1958 by the Treaty of Rome, and since its creation, it invested more than 1.2 trillion euros. It is the world's largest multilateral bank, and alone, as you can see in the screen, in 2019 we have financed more than 63 billion euros, which is more than all multilateral banks in the world combined. The EIB is also known as the EU's climate bank and is one of the world's largest multilateral provider of finance for projects supporting climate action. The IF was founded in 1994 by the bank, the European Commission, plus a number of European public and private financial institutions, and is the specialist provider of risk finance to SMEs. And in fact, support to SMEs is one of the 4 priorities of the group, the other 3 being innovation, environment, and infrastructure. And just to give you some order of magnitude of the group financing for SMEs, in 2019 alone, we financed 25 billion, which accounted for 1/3 of the group financing. Also in 2019, the group together financed about 70 billion, which corresponded to 280 billion investment, and it's estimated that this was to sustain 4.4 million jobs in small businesses. Let me now introduce you to our speakers today, Nina van Doren, Cristina Dumitrescu, and Ulrich Grabenwarter. Nina, Cristina, and Uli, it's my absolute pleasure to welcome you to today's webinar as our speakers. Some words. Nina van Doren is responsible for business development within the bank's Director for Operations and has a long experience working with SMEs, namely as coordinator for the bank's SME policy. Cristina Dumitrescu is a Senior Investment Manager working in inclusive finance at the fund with more than 20 years of experience as a stakeholder relationship manager. Ulrich Grabenwarter is Head of Investments, Technology and Innovation at the fund with a long career on venture capital and private equity and impact investing. One word, how we'll organize today's webinar. I will ask Nina, Cristina and Uli to make a presentation on what the bank and the fund does for social entrepreneurs and SMEs. And after the 3 presentations, we'll open the webinar for Q&A. And as I said in the beginning, you can write your questions either in the chat box or the Q&A box. So please really share with us your thoughts, your questions, since we want to hear from you and see how finance can be part of the solution. And Nina, without further ado, the mic is yours. Thank you.
All right, thank you. Thank you, Luísa. I'm going to share a slide that zooms in a little bit on what Luísa had mentioned. This is indeed SME finance is very much at the heart, at the core of our activity. In terms of business volume, it's around 1/3 of our financing. Importantly, it's also the objective through which we really reach out to very large number of European companies in the member states, in wider Europe and across the world, really. Now, for those of you who may not be that familiar with the EIB Group, the policy goal is really to enhance this access to finance, to improve the financing conditions of SMEs and mid-caps along the different stages of development. So we really seek to provide enhanced access to finance from very small companies, from microfinance companies, early stage companies, up to then the growing companies, the innovative companies, and the mid-caps, up to the point where they become large enough to benefit potentially from EIB direct financing. Direct financing for large companies, for SMEs and mid-caps, our model is very much an intermediated business model. So we work with financial intermediaries that then in turn provide their product range, which is wide, stretching from funding to guarantees, risk sharing, and equity, including both venture capital and private equity, and more recently, venture debt. Financing we offer stems to a large extent from our own resources, but in particular, when we take higher risk, we very much benefit from mandates, from risk-sharing mandates from the European Commission and or member states of the EU. Now, bringing this a little bit back closer to the actual business, the companies, if we talk about billions, it's sometimes very difficult to understand what that really means. Now, 2019 activity, we supported around 380,000 SMEs that employed around 4.4 million employees. We reached out to those SMEs through around 500 intermediaries in the EU, comprising both commercial banks, promotional banks, leasing companies, private equity, venture capital funds, debt funds, microfinance lenders, the full range there. The beneficiaries of that financing through those intermediaries, typically small. I talk now about the loan sizes we tend to fund through our intermediated lending. The average median size is around 30,000 euros. So they're really small businesses. Small businesses, small investments also show in the average number of employees. So the average beneficiary of SME finance, that very large volume of 25 billion, goes actually to companies that have on average 11 employees. Now, one particular feature of our financing traditionally is that we focus on capital expenditure. We focus on capital expenditure, and in previous years, around 80% of our on-lending was for financing with maturities of 3 years or more. And this is obviously the part that we have been very conscious about is not necessarily the solution for the crisis at the moment. The solution for the crisis lies much more in ensuring, at this stage in particular, the liquidity needs of companies, of small companies, can be met. Now, with that focus, what we have been doing over the past couple of weeks, and I'm trying now to get to the next slide, is really two-pronged approach. One is to really repurpose the existing activities, the existing lines, be that for finance, be that for guarantees, be that for equity, and try to undo, let's say, all the particular requirements that would not be helpful at this moment in time. In particular, we have been extending the eligibility for working capital finance, so moving away from that traditional approach to have 3 to 5, even longer term financing, to really short-term needs, working capital facilities of companies that need to pay rent, that need to pay salaries, that need to bridge activities until a point where maybe they can also benefit from some support schemes. The second pillar of that COVID response is really then more novel business, a higher risk activity that we are setting up on the basis of the Pan-European Guarantee Fund. You may have heard about that in the news. That is a new facility, a new guarantee fund that will be funded by the member states and through which we would be providing additional finance for small companies. The idea being it's additional finance, not so much new products. Colleagues from EIF may develop that further. One of the lessons learned really from also previous responses is that timing is of essence, and therefore the extent to which we can work with existing intermediaries that have been working successfully with us, that know how to actually allocate our financing, is key. You will see on this slide the numbers. So the idea we have at the time, for the time being, is that with 25 billion of guarantee fund, we could mobilize up to 200 billion of finance for SMEs and mid-caps. I will pass on to the colleagues of EIF who can elaborate more on the risk finance that they provide.
Thank you so much, Nina. Cristina, do you want to jump in with your presentation?
Welcome everybody to the EIB Group response to this current unprecedented environment, let's call it this way. In continuation to what Nina said, our EIF unique approach is we are working on a delegated mandate. We take resources from certain providers like European Commission, European Investment Bank, local authorities, managing authorities, other private investors, and we deploy them by creating financial instruments where we are risk sharing with other participants on the market. We have two lines of business: the equity business, where my colleague Uli will focus on, and the debt business, the financial instruments that are targeting various types of institutions that are lending to SMEs, that are lending to social entrepreneurs, to micro entrepreneurs, to mid caps. And by doing this type of model, we are leveraging public resources, and we are reaching figures like starting from 4 to 40 times, depending on the product. The general guarantee products that we have currently available are based on EU mandates coming from different DGs. And we are covering all types of lending products in the market, be it them for students, for adult learners, for institutions involved in training or educational activities, micro enterprises, social enterprises, general SMEs, or innovative SMEs. All these products are available right now, and they are offering support to SMEs to be able to access funding when they probably don't have enough collaterals and their banks are rejecting them from lending. You can apply to your banks for any type of loans, for working capitals, for capex, for, I don't know, intangible investments into software or cultural activities or products, even for business transfers if that's your need. What's specific for the guarantee products during this time is that they allow for eventual reschedulings of your loans, and the loan is still guaranteed. depending on the product, there are different features applying, but the possibility to restructure or reschedule your loan is there. Being a delegated model, we are not the ones that are lending to the SMEs or to the social entrepreneurs. The EASY program, Employment and Social Innovation, is the first program aimed specifically to social entrepreneurship in Europe. You have on this slide a list of financial intermediaries that we are working with in different countries around Europe, and they are offering lending products to social entrepreneurs in the respective country. We encourage you to get in touch with them for the funding needs that you need for developing or starting up your activity. Before moving to my colleague, to Uli, I would want to thank you very much for all the questions that you already posed when you registered to this webinar. And there are two questions referring to what is available for microfinance institutions. Microfinance institutions are a specific financial intermediary that offer microloans to entrepreneurs, startups, self-employed. They are not banks, but they are in the market, and there are various instruments for them as well. Under EASY microfinance stream, we are offering guarantees, capacity building, and funded instruments for this type of institutions. And we encourage all of you to go into our website and check the respective product and get in touch with our team, and we may find ways to assist you. Thank you very much again. Welcome any questions you may have, and passing over to Uli.
Thank you so much, Cristina. Uli, the mic is now yours. Thank you.
Okay. Good afternoon to everybody, and thank you for joining us today for this online session. In order to leave as much as possible time for a question from everybody, I will just give you a very short introduction to what we are doing on the equity side in support of impact-driven businesses, be it on the social side or on the environmental side. You may be aware that EIF and Nina and Denise have shared, and Cristina have shared that already before in their presentations. At EIF, we are operating as an intermediated finance provider, which means that we are not directly exposed to the funding of portfolio companies of social enterprises across Europe, but we operate through intermediaries. In the case of equity, we are operating through fund investments, and that actually in return pass on the funding to companies they invest in on behalf of us. This is the investment model that we've been now running for a number of years. Basically, we started in 2013 to operate our first fund of fund investment model, and have built quite a substantial portfolio in that respect since. Maybe for you to know, it's important to know what type of impact-driven companies we actually back in our investment approach. We basically distinguish between impact businesses in three different dimensions that are featured in the slides that I'm showing right now. We're looking at impact businesses that create impact through the selling proposition, through the business model itself, meaning that they basically sell impact in their business model, and that can be on the environmental side by providing goods or services that have a direct environmental impact, or by catering for specific target communities that are in need of specific social intervention, and that social intervention is actually the selling proposition of those enterprises. Next to that, we equally look at enterprises that actually create impact through the way how they conduct the business. So that can be actually businesses that provide a totally mainstream type of product or service, but the way how they actually execute the business by, for instance, employing marginalized communities or creating a specific employment environments for people that otherwise would not get access to the employment market, that is the type of impact that they are creating. And then finally, we've got a dimension of impact that is created not through the business model as such, what is provided as a service or as a product, nor how it is provided, but the question is more where it is provided. Basically, the impact being created through the fact that the business models are executed in areas that otherwise would be deprived of any meaningful economic activity that actually can create the basis for a living of the communities that live around there. Those are the three types of impact businesses that we are looking at, and actually they stand in our investment approach basically at equal footing to each other. So we do not discriminate one group to the other, but we actually require our fund managers to look at impact dimensions in the business models of the investees that respond to one of those three dimensions and actually create impact objectives and impact tracking accordingly. Now, in the current market environment, when it comes to the COVID crisis, we obviously are in the situation that our response that we can bring to the market is not as immediate as we would like it to be, because it is an intermediate model. As much as we have a preference for the intermediated model in normal times, because it actually creates private sector activity that can sustain itself and can rely on private sector intervention and private sector resources over time. The disadvantage of the intermediate model comes to play in the current circumstances when actually the market is in attrition of funding resources and needs to actually have quickly access to capital and funding resources, but where the intermediate model actually has a longer kind of time to market in terms of the instruments. And we are currently facing that in our equity activities across the board, including the social impact businesses across the board, where we see that the dropout of revenues because of the economic lockdown, where funding rounds that actually have been lined up for portfolio companies have been collapsing, and where actually also on the counterparts of social enterprises, they feel the effect of stakeholders reprioritizing what impact matters to them in the current circumstances and what they're ready to pay for in terms of impact. All those dimensions come to play to actually create liquidity constraints for enterprises in the market right now. And that is something that affects the availability of capital along the entire food chain of enterprises as they rely on them. And this is the point in time where we actually reflect on how we can create the most swift and the most imminent response to that additional liquidity need in the market. And the first measure that we basically take together with fund managers is that we try to increase the availability of capital that they have got at the level of funds, which can be done, first of all, most imminently by giving them the means to recycle their proceeds that they got from portfolio companies in the past, so that they've got a broader capital base available to fund social enterprises from their portfolio. But equally, we are currently working out programs where we are allowed to create co-investment funds and side funds to the existing funds, so that the increased liquidity need of the portfolio companies in the portfolio of those funds is not constrained by the fund size that initially has been designed and has been designed for a market environment where they have been anticipating less liquidity needs than currently is the case. But at the same time, we're also stepping up our activities to fund new funds that are coming to the market and we take more prominent stakes in their first closings and in their attempts to reach critical sizes to be able to operate the investment strategies, because we consider that the market as a whole needs to be sufficiently capitalized, that new businesses, new social enterprises get access to capital and access to equity, in our case in particular, in order to start their businesses, but at the same time that only can be possible if the companies that are already in the market, that already have been backed by venture capital funds that are in the market, see sufficient capital in the dry powder of the fund managers that have invested in them to sustain their businesses, because otherwise there will be a competition for that capital, and that will either constrain existing businesses from having access to the funding needs that they need to meet, or it will go at the detriment of new businesses that want to come to the market and get access to capital for the startup. Basically, what we're looking at in terms of target communities of enterprises, we're looking at those companies that are not yet bankable, or because of the crisis have fallen out of the category of being bankable, and that can be because the debt ratios actually went ballistic, or because the revenues don't justify any additional debt burden to be taken on anymore, or because the businesses are simply not yet in the situation where they can generate revenues. That's the typical stage where equity funding is irreplaceable, and sometimes actually they may go even into the category when it comes to social enterprises that in the startup phase they need some grant money. Grant money, unfortunately, we have no means to provide because that is not part of our product range, but everything that we can do in creating a sufficiently broad availability of equity capital, that's something that we are working on. And with that, I think I give back to Luisa so that we possibly can move into the Q&A session.
Thank you so much, Nina, Cristina, and Rui. So I will now invite you for asking questions from the panel. It's not every time that you have the chance to have people from the bank and the fund in the same screen ready to answer your questions. I will ask you one of the questions we received before at registration time, which is, how can the EIB Group support social entrepreneurs related to COVID-19 innovations at European level? How can we encourage cross-European collaborations?
Answering the question, what are we doing for social enterprises? As I mentioned before, we're not, let's say on the funding side, we're not necessarily having specific programs for social enterprises, but what we are doing is really opening up any financing that is immediately available because of funding lines that we have signed up with intermediate know how to actually allocate EIB finance to small companies, risk-sharing schemes, and of course referring to what we're really trying to do is to make sure that the financing that is available can be used for the immediate needs of companies. So really breaking through the idea that we should have longer-term capital investment, productive investment. For the time being, what we're focusing on is finance to pay expenses, to pay salaries, to pay rents, to keep businesses going, to keep them afloat, to get them into, let's say, a start of normality, as in companies and in a number of countries, businesses start showing up. I mean, we're talking about social enterprises. There's no particular distinction in terms of the funding programs.
I have a question as well. I think it might be for Uli or Cristina, which it was also a recurrent question in the questions we received, which is all these that you just present to us also available for UK-based social enterprises?
If you go on the website of EIF and you go under the heading of Social Impact Accelerator, there will be a list of all the funds that EIF is invested in, and through the Social Impact Accelerator, and they have got the specific investment strategies, and most of them actually includes the UK in their investment spectrum, which currently is still accessible for UK-based social enterprises. Yes.
I also have a question that I think it's for you, Uli, which is, where can we find a list of all the VCs that you are providing funds to?
As I just said, it's listed on our website, www.eif.org. And if you go under the list of, under the heading of Social Impact Accelerator, you will find the portfolio funds of the Social Impact Accelerator, which is basically the portfolio of funds that we've invested in.
Another question that is one that we received several times is there any funding plan for NGOs?
For the time being, the only product that we've got available to operate with NGOs is through social impact bonds, payment by result instruments, where we basically participate as investors in pre-funding the social intervention that social sector organizations actually are conducting, and many of them actually are NGOs or at least non-for-profit organizations that actually participate in tenders of public sector administrations in bidding for the delivery of social intervention. And there is a product that we are actually also actively contributing to in the market, which is called payment by result instruments or social outcome contracting or social impact bonds. It's just different names for the same type of intervention, where EIF actually participates as an upfront fund of this social sector intervention, which ultimately then is paid by public sector authorities on the basis of impact results that are delivered by NGOs. This only means for the time being that we have to back NGOs.
NGOs, be it foundations, associations, any type of NGO, is not excluded from lending products that are guaranteed by an easy guarantee for social entrepreneurship. So even for NGOs like financial institutions, we have such a case. We can also finance them through our easy capacity building instrument.
Nina, would you like to add something? I guess that you have a very similar answer to Cristina from the bank side. I think I've lost Nina. I know.
On the lending side, sorry, for the intermediated lending side, the intermediated model is very much one where the local banks will need to make a decision on whether or not they provide a loan. So to the extent that NGOs would have revenues that will actually allow them to take up a loan, they're not excluded.
So there's a question, a very practical one, which is, so what would be the practical steps to be financed or receive funding? I think you already mentioned that in your presentation, but if you could, I'm a social entrepreneur, I need funding, I need to pay my 2 employees, what can I do? How do I go about it to benefit from all what we are doing? So maybe I can start with Cristina, then I'll go to Nina and then to
we would encourage any social entrepreneurship in need of funding to first identify what type of funding they need. Do they need debt funding or do they need equity type of funding? And go to one of our partner institutions to get this funding from. Either from the banks or non-bank financial institutions that are guaranteed by an easy guarantee for social entrepreneurship, or to a VC fund that is a social impact fund that offers this type of funding to social enterprises.
I think concretely how you can get access to the funding on the equity side is basically through the social venture funds that we've invested in, which you find a full list on our website, as I indicated before. And the equity product is slightly different to a debt product because it is not just a question of whether you've got the credit standing and you will get financing for it. equity funds typically select within the entire community of deal flow that they're seeing the most promising enterprises that they see that make the most credible case of creating value with impact-driven business models, and from that they will select their investment targets. So you need to possibly get into contact with several of them, and we have in the meantime made investments not only from the Social Impact Accelerator but also from other mandates of the European Commission across Europe in social enterprise funds that you can access, and the names of it you will find on the website of EIB.
I have now a question that is for Nina to answer, because we are asked, what are the plans for Latin America? And since the EIF is not operating in Latin America, the question is for Nina.
In Latin America, we do have funding lines with intermediary institutions, so Latin and Central America, so there are a number of intermediaries we work with. We also have a small equity activity outside the EU, but which is not particularly developed as in Europe for social enterprises. I would, if questions, if there are particular questions, maybe they can be addressed. You leave email, we will get back with more details on how to actually go about it.
I have another question, which is how are your VC partners encouraged in investing on startups or social sustainability enterprises? I don't know who wants to answer. Maybe Uli.
That's for me. It's on the equity side. Well, how they are encouraged, basically, that's their business. If we actually needed to encourage them to invest in that type of enterprises, we probably wouldn't fund them in the first place, because that would be just counterproductive. We do invest in a very big spectrum of funds that target different stages of investment of company development, from basically incubation and accelerator stage to growth capital stage of enterprises. And depending on the geographies and depending on what stage your company is in, we've got several companies several funds that are addressing the type of companies that you may be promoting. This being said, most of the investment targets that we funded so far in terms of funds do look at early stage venture capital investments also in startups. So there should, in principle, from that perspective, not be a limitation. Obviously, as I said before, in the current market environment, we are facing the situation that capital is scarce, and fund managers are more defensive in making new investments because they may need more resources for the portfolio that they have already on their books. And that's precisely where we try to create now, through the measures that we are pursuing with the COVID response of the EIB Group, increased liquidity to give funds more of a margin to operate in the current market environment, which is particularly in need of funding.
Many questions popping in. I'm trying not to repeat them. One of them is, for a European-based impact fund making investments in social enterprises outside of Europe, which EIF program might fit?
I couldn't hear your question. The line was broken. Could you repeat the question, please?
Okay. So for a European-based impact fund that is making investments in social enterprises or social entrepreneurs outside of Europe, which EIF program might fit?
Well, actually, we only have got very limited scope of intervention outside the European Union, because most of our funding programs are actually tied to the European Union, the candidate countries, and accession countries, and that's something that we need to live with. That's part of our investment constraints that we have to face because of the mandates. There are a number of equity funds that are doing impact investment outside the European Union, but they are run by the European Investment Bank. And maybe Nina can say a word to them. Nina?
Yes, indeed, there is Indeed, we do have a program for impact investing, which includes possibility to finance, to commit to equity funds that provide then equity, soft financing to social impact schemes. We do have a number of examples. As in the previous question, they are really niche activities, very important but niche activities. So any one who's tuned in and wishes to have more specific information, we can surely put you in contact with the colleagues who deal directly with those programs.
Okay. Words from my side, just to let you know that the EASY program is also eligible for some countries outside EU, namely Turkey, Albania, North Macedonia, Serbia, Montenegro, and Iceland. So we have in Serbia, we have an intermediary that I think it's part of the EIB Group that also has a easy guarantee for social entrepreneurship. So any interested Serbian social enterprise can apply for a loan there.
Okay, I have another question, which is, in fact, I have many questions. I don't think we can address all of them, but I have a question that we are a community interest company and we cannot be sold for profit to protect our mission. This is partially why we struggle to raise funding. We can offer exit strategy for the equity pot. In your experience, would we still be attractive to your select impact fund managers?
I think the non-for-profit component is indeed frequently a barrier for investors to invest in social enterprises. And we have had this difficulty in the market many times. So that's something that we also have brought to the attention to policymakers at national and international level many times, that actually the requirement of being confined to non-for-profit actually bears a number of enterprises actually from access to finance.
Uli, just a precision. They are a company for profit, but they cannot be sold for profit. That's what Mattia is writing.
Okay. If it's a for-profit company but cannot be sold for profit, then I think the only means to get to funding is actually through non-dilutive investment, meaning that type of investments that can fund the company without having access to the share capital of the company, and that is something which probably is more fit for the products that Cristina and Nina have been describing.
So, Cristina, do you want to add to Ulrich?
We know that the NGOs in general, they have difficulties in accessing finance, not necessarily for being or not being non-profit, but because their balance sheet structure is different than a normal SME, let's call it this way. Our guarantee product was designed specifically to be able to include these types of entrepreneurs or entrepreneurial projects, social entrepreneurial projects, into the pool of clients accessible, targeted by banks.
The type of partners for angel investors and where exactly can they be found? Whether it's just about the EAF instrument or another one.
Okay, on angel investors on the social impact side, we have a program indeed in place that provides co-investment alongside business angels. It is fair to say that so far on the social impact side, that is a product that has not been taken up by the market in great quantity. There are a couple of business angels that actually have a social impact investment angle, but it's currently a product that probably will not be sufficiently widespread to be a meaningful funding source for enterprises.
We are about to reach the end of our webinar. I don't see other questions that have not been answered, or if there are, you can always write to us. I would like to thank all the panelists again. We can see that we had a very high number of participants because the topic is one that is now, it's always a very close to everyone's heart as a social entrepreneur, the funding and the financing, and with the COVID even more so. I would like to, before everyone leaves, someone asked me whether whether the presentations would be available because they joined later. As I've said, the webinar will be available in our YouTube channel with all the presentations. I can also see that some people are asking about very precise questions. So just send the email to the Institute and then we'll forward to the panelists and they can get back to you. And before you leave, please answer our poll. Denise is in the back of the screen and she will be about to launch a poll. So you can all answer the questions. So it's already in your screen. Thank you so much. And to the panelists and to the very participatory public with very nice, very good questions. Thank you. So please answer the 3 questions that are on your screen. Thank you, Nina. Thank you, Cristina. Thank you, Uli. It was a pleasure.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye-bye.